Hello everybody, today we're going to be talking about what's a good credit score to buy a house. Hello everybody, Will Frazier, Realtor here and Credit Guru. And my mission is to bring you the information you need to overcome your credit obstacles of the past to turn your dream home into a reality. Now, as a realtor and a credit expert, I get asked a lot, what's a good credit score to buy a house? And I can tell you that the answer isn't as simple as what you may think. Now, what I can tell you is the most common answer is going to be a 620 middle score. And when I say middle score, that means the mortgage lender is going to pull all three of your credit bureaus. And they're not going to go with the score that's the highest or the lowest. They're going to go with whatever score is in the middle. Now, FHA will actually let someone with a 580 credit score get approved for a mortgage with a 3.5% down payment. But if your credit score is lower than that 580, you would have to put a 10% down payment. Now, don't be fooled just because you can get a mortgage loan with a 580 score and think that you won't pay a higher interest rate, because your credit score still will affect the interest rate that you get on that loan. So it can increase your costs as far as that loan goes. And if you're not sure of what an FHA loan is, it's a loan that is backed by the Federal Housing Administration. Now, the Federal Housing Administration, FHA, is a government entity, and they basically back these loans, or they tell lenders that if you go ahead and give out this loan to this person, we'll ensure that they actually pay it, and if they don't, we'll reimburse you the money for the damages. Now, this is good because the average consumer may struggle with their credit score, so this lowers credit requirements and also makes home buying more affordable with lower down payments. But because of this, you do have to pay mortgage insurance, and this isn't the same thing as homeowners insurance. So basically, mortgage insurance is where you pay a premium to FHA, and for that premium, they insure the lender that you are going to pay them back. And the funds used from that premium is part of the pool of funds that they use in order to reimburse lenders who don't get paid back. Now, other than FHA loans, I'm pretty sure you've heard of conventional loans too. Now, with a conventional loan, you're going to need to have like a 620, 650 score or better than that. And just so that you know, all of these requirements can vary from lender to lender. Now, most conventional loans are going to have a little bit of stiffer requirements as far as getting approved for the loan, but it's not impossible or hard to obtain. Now, what's important to note on a conventional loan is that you won't have to pay mortgage insurance as long as you put down a 20% down payment. If you put down anything less than a 20% down payment, you will have to pay mortgage insurance until you get the loan value down to 80%. You get the loan down to 80% of the home value. We also have VA loans, which is also another government-backed loan. And those loans actually have 0% down payment, but you do have to have at least a 640 to 650 credit score. And one good thing about the VA loans is that you don't have to worry about any mortgage insurance with those. Now, we also have the USDA Rural Loan. And with that loan, you have to have a 640 score or better. And you also get to take advantage of 0% down payment, but you can't have a house that's located within a city or a town. It has to be in a rural area. And also with those, mortgage insurance is required. Now, as you can see, there are a bunch of different credit score requirements depending on the type of loan that you get. And that's why it's not so easy to really say what score you need to have to get a house. And that's why it's not easy to give a general answer on what score you're supposed to have to get a house. But of course, the better your score is, the more likely you are to qualify for any type of loan. But there are also other requirements that may be required of you in order to get approved for the mortgage. So there's also DTI, which is your debt to income ratio. You can have a perfect credit score, but if your DTI isn't where it needs to be, they'll still tell you no, because that tells them if you actually have the money to afford to pay for this house. It also tells them how much money you qualify for as far as the mortgage. So your debt to income ratio can determine whether you'll get a $100,000 house or a $200,000 house. And also, depending on certain marks on your credit report, if you have recent negative activity like recent late payments within the last 6 months or maybe 12 months, they may tell you that you need to have reserves. Now, what reserves are is basically a month's worth of mortgage in a bank account, and they may tell you that you need to have 3 months worth of a mortgage in your bank account in order to qualify for the mortgage. And that's just one precaution, just to make sure that you have some money saved. If you've been, recently late on accounts, they want to make sure that you're not late on the mortgage by having those reserves there. And there are also other requirements that come into play too. It just kind of depends on your credit situation. Now, the question of the day is going to be, have you heard anything as far as what your credit score is supposed to be to get a mortgage? Have you heard anything different from what I've said? If so, please leave it in the comments. As always, I want to thank you for sticking around to watch the entire video. And if you like this video, please hit the subscribe button so you can get more videos like this. Like the video and share it.